This is not your regular video, podcast, blog. See, I know that you already know that investing helps you grow your wealth. So I'm not here to waste your time. No, I'm here to show you why you should invest based on historical, economic, and real estate research. It's all about connecting these different concepts in your mind and giving you a deeper understanding of real estate. You're going to be blown away. Are you ready? My name is Enrique. I work with UTG Real Estate in South Florida, and I will be guiding you through the real estate jungle. Oh, I'm excited. Look, successful investors don't speculate with their money. They need to have a thorough understanding of money, real estate, and history. But that's just the beginning. The most important part is the integration of these concepts. For example, do you know the history of money? Or how the real estate prices have changed through US history adjusting for inflation? Oh yes, we're going deep. Fasten your seatbelt. We begin by connecting money and history. Suppose you're an average middle-class worker in your 30s in 1970. You got the picture? You're an average middle-class worker in your 30s in 1970. How much money are you making? It's going to be about $10,000 per year. Now, fast forward to 2020, same position, you're making about $83,000 per year. That's an 831% growth. Sounds fairly accurate, right? In 1970, you were making around $10,000 per year. If you fast forward to now, you're making $83,000 per year. Actually, it's wrong. Your view of money today is different than it was for a person in 1970. The truth is that $10,000 for a person in 1970 was really about $47,000 if we adjust for inflation. And if we look at the real US median income, we will see an amazing increase in salary from $47,000 to $59,000 today. In essence, workers have been given a raise of $12,000 in 50 years. This may be okay if all prices remain the same, but as you can probably intuit, real estate prices have increased much more than that in the last 50 years. Let's take a look at that. This is a big one. Here we connect money, history, and real estate. Notice home prices from 1965 to 2020. Let's use our previous example. You are back in 1970, average income of $10,000. Your house is worth $30,000. That's not bad, right? If your income is $10,000 and your house is worth $30,000, that's a third of your house. Now, fast forward to 2020. The same house, the same $30,000 house is now worth $325,000. That is a 1,083% growth in 50 years. First thing, notice that your 831% income growth from before does not match the 1,083% real estate price increase. What does this mean? It's harder for the average worker to buy real estate, and this is exactly why you should buy real estate. Whoa, I may have lost you there. So I should invest in real estate because it's harder? Well, not exactly. Let's consider a common question. If I invested $10,000 in 1970, how much would that be worth today? If I invested $10,000 in 1970, how much would it be worth today? I want you to guess. What would you say? Is it 100K? 300K? The correct answer is, drumroll please, $1,431.42. It's not a trick. The $10,000 didn't grow. The value of properties did. Here's a huge investor mindset shift. Real estate property holds or increases in value while cash becomes worthless. Look, the correct way to see this investment is if you bought the $30,000 house in 1970, it will now be worth $325,000. So you should exchange your dollars for real property because the cash is becoming worthless, but the property will appreciate. And as far as we can tell, money will continue to be created from thin air by the government, thereby progressively reducing its value. Are you making some connections? Are you learning? I want you to truly comprehend the effects of inflation because it is a major theme throughout this lesson. Let me clarify quickly. Inflation has caused your initial $10,000 to become $1,431. Like I said before, $10,000 to $1,400, around there. This is buying power. Your money is less valuable today, so it cannot buy as much as before. Here's another way to look at it. If you wanted to save the equivalent of $10,000 in 1970, you would have to save $66,100 today. And how many middle-class families do you suppose have saved $66,100 for a property down payment? Yep, that's right, very few. Have you heard of successful investor Robert Kiyosaki, author of Rich Dad, Poor Dad? He says that the middle class is screwed, but not unless you start investing. As hard as it may be, it is becoming a necessity. All right, got it. So money is becoming less valuable, real property holds or increases in value, and the average Joe is not making enough money. If I invest now, will I have to wait 50 years to get a return? You're right. Real estate is a slow-moving giant, and it takes many years to see significant growth. Real estate is a game to be played for the long term. But that's not the whole truth. Of course, you can also benefit in the short term. Suppose you are you, and you are now ready to invest your savings in real estate. You want to buy a property and rent it. Let's consider two real South Florida properties, both on the market in June 2020. Okay? One is a 3-bedroom house in Delray Beach for sale at about $350,000. The other is a 3-bedroom luxury condo in Coral Gables for sale at $650,000. If you get lost in these numbers, don't worry. I will clarify and it will make sense in the end. If you purchase the Delray house with a 20% down payment, your estimated mortgage payment will be around $1,900 a month. In comparison, if you purchase the Coral Gables condo with a 20% down payment, your mortgage will be about $3,700 a month. Before we calculate profit, which I know you want to get to, I want to show you that I'm not making these numbers up. The average rent for a 3-bedroom house in Delray is currently $2,500 a month, around there, maybe a little more. According to Zumper, this is according to Zumper.com. Similarly, the average rent for a 3-bedroom condo in Coral Gables is $3,800 a month. Finally, we get to short-term profits. This is where you realize that investing in real estate is not only worth it, it's a no-brainer. Well, don't be a no-brainer, but you get what I mean. Consider the Delray house. If you take into account the cost, 20% down payment, 30-year mortgage and average rent, your gross monthly profit would be $609 per month. That's not all. Remember, do you remember the $349,000, $900 price tag? Let me repeat that. Do you remember the $350,000 price tag for the house? You never paid that. You only paid the down payment, right? It was the 20% down payment. If you keep the house rented, the tenants will continue to pay the house for you while you continue to earn $609 per month in profit. Are you excited now? Well, yes, but I don't see how I can save the 20% down payment. It's $69,980 for the house. I don't see how I can save that in the near future. Okay, you have a point. How about we lower the down payment to 5%? 5. Now, you pay only $17,500 and profit $358 per month. Is that reasonable? You bet. You just bought a $350,000 house for $17,500. Inflation now becomes less of a burden on your shoulders. You are an investor. Wait, so what about the Coral Gables condo? Well, if we do the same calculations with 20% down, you would profit $108 per month on that one. And if you pay only 5% down, then you no longer have a profit. You'll actually have a loss of $357 per month. This means that even if you have the condo rented, you will have to pay $357 to complete the mortgage payment every month. What's the moral of the story? Don't be a no-brainer. As Grant Cardone says, not all real estate is created equal. You may need the help of a real estate professional or an experienced investor so you can find the right property. Now, do you see why you should invest in real estate? This is what this is about. Why you should invest in real estate. I hope this was an enlightening lesson for you. If you're still there, thank you so much for your attention. And if you have not done so already, make sure to join our Facebook group, Q&A How Real Estate Works. It is a supportive real estate community of professionals, investors, buyers, sellers, and anyone interested in real estate. Learn and get your questions answered there. Let me repeat, it's a public group, no advertising allowed, just questions and answers or educational information. It's called Q&A How Real Estate Works. Make sure to join on Facebook. Until next time, expect new insights.